HDFC Bank has posted over 25% growth unfailingly for the past 80 quarters and kept bad loans to 1% this entire period. The bank was recently voted India's most valuable brand by WPP. For the past 1 year, however, growth has slowed to 21%. MD Aditya Puri may retire next year on turning 65. Much to their relief, the Reserve Bank recently raised the upper age limit for bank MDs to 70 years, ensuring that Puri will be in the system for another 6 years. So what's up the super banker's sleeve for his last innings? Let's find out. Let me say important RBI rule that has come in and which has warmed the hearts of many in the markets, many in the investment community. The Reserve Bank has raised the upper age limit for retirement for managing directors to 70 years. Now, first up, why did they do it? I have got three options. You tell me which. One, Raghuram Rajan knows that banking talent is scarce and whatever is there should be conserved. B, Mr. Aditya Puri has clout.
B, you can eliminate.
Okay.
They probably did it because they realized that if the rest of the world is not senile till 70, the bankers could probably keep their sense till then.
Okay, well, fair enough. I guess they're bringing it in line with the Companies Act, as the press release itself said. But that really clearly gives you another 6 years. I'll call it the last innings just because that makes it growth for 80 quarters. What will be different in the last innings?
See, this is actually a very exciting time for us. What has happened, if you see, Latha, when we've been talking over the period, in the last 3-4 years, we've gone to semi-urban and rural India. That's where 60% of India lives. And that's where organized finance is actually not penetrated at all. The second part is when you see what's happened to both the advertising world and to big data and technology. Of channels, you have multiplicity of distribution channels for companies, multiplicity of customer segments, which makes traditional brand building very difficult. But what it also does, if you analyze big data very well, is give you the ability to give the right product to the right person at the right time. And the third is what we're really doing in terms of our, you may call it CSR, you may call it corporate responsibility, where we brought 3 million families from below the poverty line to above the poverty line.
Okay.
Now, 3 million families, 5 to a family, that's a lot of people. We intend to take this to 10 million. You see a combination of this. It's not only going to make money for the shareholders, but it's personally gratifying to substitute the money lender, to go in and deal at the cutting edge of technology, and to deal with the bottom of the pyramid at the same time.
Well, I was going to come to the actually financial inclusion thrust of the government and the RBI a little later, but let's handle that first. Is that Jan Dhan Yojana also applicable to private sector banks?
Yes, absolutely.
Okay, so you mandatorily will have to open a set number of...
we have villages allocated, and considering we have neither government ownership nor government business, this is from the goodness of our heart.
Is it goodness or will it be beneficial at all? I mean, this is a very genuine problem because bankers, very senior, responsible and equally committed bankers like you told us that with the Reserve Bank's previous thrust, they opened something like 10 million accounts. One bank told us this, of which probably 3 transactions got done in the whole year per account. Now, the point is the no-frills account or, the basic accounts are not getting used. Will it be any different in the next 6 years?
If it's going to be different, it'll be different in the next 6 months. And if it's not, then it's not going to be any different in the next 6 years.
Why should it be?
The point is very simple. Unless the government follows through and ensures that the direct benefit transfer and other subsidies is made into this account, number one, so that there are balances, and we are also able to build credit history. 2, the government is saving a lot of money, and I think they should be gracious enough to pass some of that to the banks because we are commercial organizations. Then we will follow I think this time they're looking very carefully at, they will ensure, at least that's what they've assured us, that they will ensure direct benefit transfer. They will ensure that Aadhaar seeding is done, because Aadhaar seeding is really lagging behind. So Aadhaar seeding has to be done, and then we have to match the records with the government, and money has to be paid there. Then you can look at further inclusion in terms of providing an overdraft dependent upon how much money he is regularly getting from the customer.
Yeah, but you've been assured that 2% some commission for every year.
Yes, but we were assured that previously as well.
And not
and
followed
it did
through.
not happen.
Okay, now I'll tell you, I took one case study on a previous Indianomics show. Andhra Pradesh is the United Andhra Pradesh was most advanced in terms of Aadhaar seeding. You know, they had 8 crore Aadhaar cards. Practically the entire state was covered.
They shifted to the post office.
Exactly. That was my point.
So I know that.
No, then how are you so sure?
No, I'm not sure. I'm just hoping.
Okay.
So, and Rajasthan has its own scheme. So the state governments and the center have to be in sync. Aadhaar has to be there, and they have to ensure that we get the direct benefit transfer. Otherwise, there is no other source of funds.
Okay. Well, that exactly also was my point. Okay, let me come to the other issue. Do you think Payment Bank will be able to achieve, at least in urban areas and semi-rural areas, what probably basic accounts won't?
I'm not quite sure. I think we need a clear definition for everybody to understand what a payment bank is. Everybody goes back to this M-Paisa. Now, M-Paisa is only a payment mechanism. It is not an account. The moment you talk of a payment bank, the telcos will have to set up all the infrastructure of a bank.
Yes.
Then they will get deposits. So the issue is, after that, are they going to do anything in terms, are they going to lend? No. So financial inclusion, only the first step is the opening of the account. He only becomes financially included when you allow him self-sustainability, which is the next step.
Their first response was that we will get more stickiness in our prepaid accounts.
Right.
So we will follow through, at least because there will be benefit for the telecom business, even if this one is not in itself paying. You don't think that mechanism, that logic will work?
I think that's for the telcos to decide. I think they made a lot of noise. I haven't seen a payment application in with the Reserve Bank as yet.
No, there isn't. I agree. They still have some problems with banking regulation, and they themselves entirely coming
And I saw something in the paper that we want this concession, we want this concession. If those concessions are given to the banks, we can even do equally, if not better.
But you never thought of tying up with anybody? There's no conversation.
It doesn't work, Latha. The tying up is, the pie is not large enough for two people to share. And then each one is saying, this is my customer and this is my customer. And we actually came up with a joint plan on which we spent a lot of time with Vodafone 3 years back to launch a better version of M-Paisa, which we did. I personally went and visited the villages. And then when we went to the second step, we got into issues of sharing the money because the pie wasn't large enough.
Okay. Well, let's hope this time both succeed, you know, the financial inclusion through Aadhaar and...
But anyway, we've done our bit. Everybody will have a bank account. So if they all have a bank account, then what's the payment bank going to do?
Yeah, let's see. If it's a problem of being overserved, that's okay. Here, at the moment, we are in a problem of being underserved.
More the merrier.
Okay, let me come to another issue, which, of course, the market wants to repeatedly hear about, the FIPB. I mean, have you any assurance that they will grandfather the clause and allow you to have more FII investments, not treat HDFC as a foreign account? What's the way forward?
No, see, this is the new India now. You have to think differently. Grandfathering is only one of the options. Honestly, if you want to promote FII and FDI into the country, the plethora of rules that we have is so confusing that I hope somebody really understands the logic behind. Frankly, if FII is coming into our country, why should there be any limit at all? There's investing money here under our rules and regulations without asking for management control. I frankly think there should be no limitations. The little that I've discussed with various parties who would be involved in this decision seems to suggest that the general feeling is that we should have a far more liberal regime so that money comes in, both FII and FDI. So I am very hopeful that the end result that we want would be achieved, whether it is through grandfathering, whether it is through a liberalization of the policy, I really don't know.
I mean, do you think you will know one way or the other in a month, in 2 months?
I'd say within that time frame, yes.
You should know.
Yeah.
And what if it was negative?
Nothing. I'll do a simultaneous issue, one local, one overseas.
Okay. Yeah, I like the way, I guess, so many people who have hit the limit are doing.
Yeah.
Okay, okay. But do you need capital now? Will you be
We don't need it
making
now.
an issue?
We don't need it now. But if the rate of growth increases, and now Basel III is imposing more and more conditions, we would maybe need it in 9 to 12 months or 9 to 18 months, depending upon the rate of growth. So there is no immediate need. Our total capital adequacy is 16% plus, and Tier 1 is 11 plus. So we will need it at some stage. We're just being careful.
Okay. So let me come to the growth issue, since you broached it yourself. You know, I agree with you, 80 quarters. Actually, it is not 80 quarters of 20% growth. It is 80 quarters of 25% plus growth.
Okay.
But in the last 4 quarters, you have come down towards 21. Will the base be this kind of a showstopper, or at least slow you down? Or do you think you will overcome even that? You overcame it for 20 years. Will you yet overcome it?
So what has really happened is our performance has not altered at all. If the when we were making 25%, the GDP for the country was 7.5%.
Yes.
I assure you, at 7.5% GDP growth rate, we will make more than 25.
Okay.
But to expect me to make the same at 7.5 and 4.7, I think, Latha, you would agree, there's something amiss in the maths, right? So the slowdown is because there's a general slowdown in the economy. Even within that, I could still press and make 25, but I don't want to push the envelope. Because we have the capacity. Even in this, we don't have the bad debts, we have expanded our distribution, but we normally don't like to push the envelope and try and force growth. So our normal basis for growth is GDP, real GDP into 3 is what the system grows at, and we gain market share of 4 to 6%. I assure you and anybody else who wants to hear that is intact.
All right, point taken. Prudent banking, you should not run faster in a slowing economy, but is the economy turning? That question to you, Mr. Puri, after this very short break. We are back in a jiffy. Welcome back to Super Banker, and no prizes for guessing who the Super Banker is. Mr. Aditya Puri is my guest. Mr. Puri, achhe din. Many CEOs I speak to say, you know, the vibes are good, but on the table I have nothing to tell you that I'll grow faster next quarter.
I wouldn't necessarily agree with that. Let me put it differently, Latha. If we step back, nobody has a magic wand that it's going to happen overnight. So say we were at 4.7. We had low-hanging fruit, and we have a lot of actions that have to be taken for the long run. If we take the low-hanging fruit in terms of getting the stuck projects going, getting faster decision-making, getting clearer policies, restricting expenditure, and defining what's going to happen, plus a stable rupee, I think that's happened. So we've probably touched the bottom, and we are recovering. So we expect this fiscal, the growth, to be around 5.5%. We really don't expect new investment demand. There are some brownfields, so like the motorcycle guys expanding, or the consumer durable guys expanding, but we don't really expect greenfield investment for at least another 12 months, because even with the change sentiment and everybody being positive, from the time you conceive a project to the time it hits GDP is going to be 12 to 18 months. So next year we are seeing it around 6%, and 7% or thereabouts only comes year after next.
The latest RBI numbers for the sector itself is still 13 something.
They went down to 11.8, so but I think 13 is about the normalized number. Okay. I think you will see pickup in credit growth every quarter, but so not a dramatic.
You're done with the worst, you think?
I think so.
Further contraction is not.
Absolutely not.
Okay. The other flip side of contraction really is asset quality. What's your sense about asset quality? Well, before that, let me first ask you, what do you make of this willful defaulter clause and the strengthening of hands of bankers? Will that be a great stick to wield and maybe arm twist borrowers?
I think a combination of the statement of intent by the governor as well as the Ministry of Finance that bankers' money is to be returned is the first step, which is great. They followed it up with action. RBI came up with the stressed asset 1, stressed asset 2, basically sending a signal, we are monitoring what you're doing, and we want, 1, the banks to recognize problems faster, and 2, to resolve them faster. Yes. The third, the statement that nobody has a divine right to continue with the project. If he can't run it, he has to move out and his equity is to be written off according to Chapter 11. I think you're seeing that. So you're seeing the willful defaulter examples. You're seeing people selling off their assets so that they can pay loans. You're seeing people accessing the capital market so that they can pay. I would say we're seeing progress. We will probably need to tighten further. Oh yes, absolutely, because ultimately we need a much lower level of NPAs going forward and a clear understanding and quicker resolution. I think they're determined to do that, and that's a combination of change in procedures, law and faster action.
Okay. Well, what about market development itself? He certainly tried a lot in terms of market development in the 1 to 14 day term money market. Do you think all that is working? Is he in the right direction? Will we have a better yield curve sometime soon?
One day.
Well,
but let's put it, see, what is there is that he's trying to see whether banks have more than 1 day money. They have 15 day money.
yes.
But most of them only want to deal in the call market. So he's been trying this 14 days, 30 days, maybe wants to extend it to 90 days. But 90%, I don't know the exact, but a large percentage is just a bank dealing with the RBI. Within each other, that dealing has not started. But he'll have to take a number of steps before it'll reach. But if you're talking about a debt market, then I think we are a long way off from a debt market.
What more pieces do you want? Everybody has, stated, reiterated their allegiance to creating a bond market. I have heard it ad nauseum for 12 years.
Yeah.
But what's the piece that's missing?
I think it took Dr. Reddy to tell me this in Hong Kong. I'll tell you the piece that is missing. The problem is the fiscal deficit of the government. So if you take household savings at about 12% invested in financial assets, corporate at about 8 to 10%, the fiscal deficit of center and state combined is 10%.
Yes.
So there's very little left over. You add to that the fact that most of this gets tied in SLR, which is held and biased, so there is no trading, and so you can't have price discovery. You add to that, since 90% of the issuance is government securities, they only issue 10 years. So 75% is in 10 years, 15 securities have 90%, part of it is held to maturity, and the government deficit is not reducing. Now with the help of a lower oil price, hopefully greater divestment, we better if we bring the fiscal deficit to 3% or below, then I remember discussing with Dr. Reddy, at that point of time, there was a time actually that given the deposit growth, there would not have been enough government securities.
Yes.
So, and you add on top of that, is the key question Dr. Reddy asked me, and he says, you've written all this mechanics about a debt market. Well, Mr. Puri, where's the investor? It's not as if there's money sloshing around. All surplus money, term money, is being utilized, whether it's insurance or pension or any other long term, between the fiscal deficit and other instruments. An arbitrage-free yield curve and a proper issuance of government securities and trading starts from that fiscal deficit.
It's really very far away. Do you think infra bonds will be some kind of a bridge?
Infra bonds is very good. I mean, infra bonds is, I think, the RBI recognizing that if you're not going to have a bond market for 2 to 3 years, and the banks are going to be financing infra, why go round and round the mulberry bush creating IIFL and all those people and then the bank funding it? So they're basically saying we'll allow you term money without SLR CRR so that the price is right.
So you might get something of a bond market because ultimately people trust a bank issue. CDs have a better market than any other instrument.
So you will have a bond market instead of corporate bonds.
We get a curve, you think, because then it will become...
instead of corporate bonds being 10% of the market, they'll become 15% of the market.
Okay, you'll have that many more bank bonds. Okay.
And so, but unless you have an arbitrage-free sovereign yield curve, and from the yield curve you need to create the derivatives, and the derivatives can't be created on a simple bond, but one step at a time.
Okay. Well, inflation. I mean, are you hopeful that now all the pieces are falling in place? 3-4 years ago, or for the past 3-4 years, an onion or a tomato or one vegetable, potato inflation could easily become a generalized food inflation and then a general inflation. It's happened 4 times, and now the governor is insistent that I want to fight and win this battle once and for all. You think the ingredients are in place that this time around we are all likely to win?
I hope so. Further, God has also helped. Brent is down to sub 100. So that's going to be one help. But this food one, I'm really not sure anybody knows what happens in these two. It's just those 2-3 months it picks up. So they're making all the effort. I think the government, the governor's in the right trajectory in saying, look, we've got to lick it. If we don't lick it, there's no point carrying on and coming up with other measures and saying this will be controlled. We have to have a clear idea. He's reached the 8% on CPI, 6% on WPI. And I think with just oil not going up, you'll probably reach 7. And then if food comes right, you will reach the 6.
Okay. But you would insist that, I mean, would you agree with his position that we have to win this battle once and for all?
I agree with both his positions, actually. Not only that we have to win this battle, I don't think the impediment to investment today is a 25 basis point cut in the policy rate.
Okay.
Interest rate is not the key. There are a whole lot of other things which you are aware of. I can repeat them if you want, but it'll be waste of time. So I agree with both his statements that it is not the impediment. And in any case, as of today, we've got the call rate is lower than the repo rate. So there's enough money in the market. So what are we talking about? Why do we keep focusing again and again on interest rate? Can we get our infrastructure, our environment, our coal and all of that sorted out? And I assure you with a good governor who's respected all over the place. I just came back from London and Tokyo. The monetary policy is in good hands and is not the crucial part for the revival as yet.
To be fair, in the previous policy, the government did not make that usual statement like a broken record that the governor has not cut rates. I hope they stay in sync with him in subsequent policies as well. You know, this infra bonds gave us the idea that, you know, HDFC could issue a lot of infra bonds if it became a bank like IDFC is expected to. You have said that clearly that infra bonds makes it attractive. What should we assume? I mean, how many years must we wait before this giant can become one and actually become the biggest player in the country, which it needs to be?
See, we've always said, this is not a new issue. We've always said, does an HDFC-Bank merger make sense? From a business point of view, I think so. Are there regulatory constraints? Yes. With the infra bond, we have made progress, but we haven't solved all the problems. So I think a few more regulatory constraints on the static balance sheet of HDFC, if that were exempted, I think you would see it fast. At the moment, it's not on the table.
Okay, but you know, one of the fears of the investors that now that you're going to be there for another 6 years for sure, actually the merger gets postponed because there are too many good men in the organization and therefore merging will, you know, probably somebody will not be around. Therefore, actually, your, you know, the extension of your tenure is seen as postponement of merger. Good analysis?
Very bad analysis.
Why?
Let's say there's place for all, and even the place at the top, no issue.
Okay.
That is the least of the issues.
Okay.
We are very clear if it comes about how it will be run. Unfortunately, we need some help, and with the day we get the help, I assure you, the hypothesis that you have drawn out that it was wrong will be proven to you.
Okay, well, can you just time, I mean, do you definitely need changes in the law before the merger happens?
Yes.
Or do you think that, you know, you will have a sufficient number of infra bonds?
We just need RBI to give a few concessions.
Okay, which you cannot be very sure. If IDFC happens,
yeah,
and you know for a fact that IDFC got these concessions,
then we will look at it, and if it makes sense, we will do it.
Now, since you broached the Raghuram Rajan issue first, how would you rate the first year? What is the hit and what is the miss?
You want me to rate the governor?
Why not?
You must be joking.
Okay.
Let me put it this way. I respect Mr. Bimal Jalan, and I'll go by his judgment.
Which is?
Which was a 10.
Okay. Yes, he said 10 on the channel.
Okay.
I agree with you.
Then?
Okay. All right. You're playing it safe. He's a regulator. I agree. I wasn't joking.
Not to play it safe.
Okay. Let me
Don't go by his rock star image. Huh? He's a serious man.
No, I agree.
So you better play it safe.
Puri, it was a pleasure speaking with you. Thank you very much for joining us today.
Thank you, Latha.
On the Super Banker.
Thank you.